As global markets continue to take a hit amidst the COVID-19 pandemic, there seems to be some sort of stability that is starting to creep in. Earlier, we were joined by market analyst Mark Lee for more on this.
It's been a very turbulent time. In terms of a time frame, I think it's very, very difficult to give an exact time frame. However, I'm more optimistic than most. I think we're going to see a U-shaped recovery. So short term, again, continued volatility, aggressive price swings in both directions. But the key is going to be tracking those coronavirus cases. Similar to a market, identify those trends, track the infection rate day on day. And once we see those curtail slightly, then that's going to be the light at the end of the tunnel. Once we do have that light at the end of the tunnel, that's really going to move investors' money back into those riskier assets. So as you said, a very turbulent time, but I think we're seeing the first signs of recovery, which is great.
The French Minister of Finance early this morning came out and said that the European Union governments should prepare for a war-like recovery strategy across the EU. Now, is this something you see being replicated across all global markets? We're talking about Australia, talking about the US, Japan as well, African markets, JSE, and the Nairobi Securities Exchange as well.
Yes, of course. And as you said, the European Union has been impacted immensely. But for me, we're seeing a positive sign coming out of China. So that's now the blueprint. We've seen how China have handled it, a nation that was impacted immensely, both health-wise and economically. But they're now giving us the first signs of a timescale for recovery, which is great. We had positive manufacturing PMI out of China, 52.0 versus 35.7 previously. So that reading above 50 really signals expansion. So people are getting back in the factories are reopening. And it's a real good sign that the supply chain is being pieced back together. Of course, the missing piece of the economic puzzle will be renewed demand, and that demand will come over time, of course, from Africa, from the American regions and the Union.
Markets that have been more or less exporting their raw materials, does this present for them that there has been a time like this when supply chains to the places they export and then later import from were locked off?
Yeah, it's a very, very difficult time for businesses, and as you said, particularly commodity and exporting. But the key thing for businesses is to really adapt. There's a lot of doom and gloom, so try and block out that noise and really hone down on how it's impacting your exact sector. And of course, these times of crisis, they yield opportunity. So be positive, use innovation, and really be flexible to these changing consumer demands.
Let's look at the possible investment opportunities for these markets, being that we're being a little bit more optimistic. If you advise an investor or someone who's interested in, who has some spare cash to put away right now, where do they put it?
For me personally, I've got a long bias towards global indices levels. We saw that historic and very sharp sell-off, in particular US indices. They shed over 30% on Wall Street. So I think it's a very favorable risk versus reward trade. If you look at the grand scheme of things, this historical sell-off is a real anomaly in terms of the bigger picture. So my bias would be to be long. And there's a couple of reasons why I've got that long bias. We've seen central banks very, very aggressive, record-breaking fiscal stimulus. And that's really providing a safety net under that surface of uncertainty. For me, that's given me peace of mind that they're being so aggressive. And of course, we need to be very aware of the upcoming US election. Mr. Donald Trump, the president, of course, a man who has taken immense pride in job creation and prosperity in economically in America, he'll be very, very conscious of current prices, particularly as we get closer to November. He's got plenty of cards he could play. Of course, he could lower tax, lend affordable support to small businesses. So it's definitely something to be mindful of.
What role is the private sector going to play, and how quick should we expect some of these other sectors, aviation, cruise lines, to be able to rebound?
Of course, those sectors have been impacted immensely. As you said, travel and cruise and tourism, they've really suffered the most. So I expect a recovery early next year. Again, very, very difficult to give a time frame. Let's wait and see how the market unfolds. Let's block out that noise and read price action purely, and see what the market tells us in those coming days. I think we've now reached a pivotal time in the market. We've just got past quarter end, potentially book balancing. We're now into a fresh trading month. So really hone down on what the markets are going to tell us in the coming week.
Now, when you look at back home here, the East African community sector is largely dependent on the service sector and tourism for foreign exchange there. Now, these have been greatly hit. Could we put a time frame to when we expect these to kind of stabilize and we see them be able to recoup?
Again, very, very difficult to give a time frame. However, the African region can take immense positivity from the recovery China's shown. Of course, a huge trading partner with that region. That's very, very positive for the African region.